So, I mean, right now we're just seeing complete panic in the markets. How quickly 340 goes down to, we touched below 250 today, closed down 11%. And we're just going to continue seeing the market with these crazy gaps in the mornings. You know, the fear is still very much there. The panic is still very much there. We're just starting to see more and more businesses close in the U.S. So, you know, you figure until this is just getting started, if this is the beginning of a, 5-week, 8-week thing where we're closing all businesses and, they're going to have to step in with some sort of stimulus. Who knows what it is? But right now, it's a great time to be a day trader in this market, a really bad time to be a swing trader. If you're a swing trader, definitely step to the side because it's just like mayhem out there. So we're doing well day trading this stuff. And if you're on the sidelines, have no shame and just staying on the sidelines, waiting this out. There'll be great opportunity on the way up. What you got for me?
So I sent you that email with a couple of the charts. If you want to pull up just that first one of the SPY under Anish's question, I'll just take a quick little minute. So we know you have it up.
Oh, I got it.
So we see here, again, we talked about this like a while back. We talked about like the market needs like some legs. So if we're looking at, going back to 2014, like 180 area, we were in a very similar environment. All through 2013 up to 2015, we were just running to new highs. We were coming off, the lows back in the financial crisis. Very similar market where we were in uncharted territory from a price standpoint. We had a first correction. We held 180. We bounced back to new highs. Another correction. We continued to hold 180. And every time we thought 180 was going to break, that the roll was going to end, we were going to go back to, the 2009 lows. That didn't happen. And what we're starting to see now, or at least what I've been trying to keep a close eye on, and we've had talks with this Sheikh about like SPY 230, where we're starting to see a similar pattern again, where 230 held back in 2017. We had our bear market last year that lasted for one whole day. We got close to 230 and it held, and then we went on this crazy run, and everyone thought we were going to go to 5,000 in the SPY, and now we have this stuff going on. So for me, I'd like to see us potentially kind of shake out that 230, and I think that just from a chart, I don't care about the outside stuff and whatever everyone's freaking out about. Just from a charting standpoint, I think if we can flush down through 230, and that's when everyone's going to really be as panicky as they are now, and we get a rip back up through that, I'll definitely be a buyer, versus whatever those lows are. Just because for how fast and how quick we've come down this far, it's not like this market's going to drop even if it dropped another 10 or 20% from here, it's very hard to expect it to just like when everyone at the top thinks it's going to go higher,
10%,
very hard for
10% drop is only just below this 220 now.
Yeah, but that's what I'm saying. I think that just from a price and how stretched everything is gotten, it's not like you can have this 5 days in a row where it's going to just keep dropping 10%. And if it does, I know nothing and never listen to me again. But I think just from strictly a charting standpoint, I think if we push through 230 and get something to move back up through it, that's when I'll be looking to add some more versus whatever that low is, just from that percent drop. So that's just my take on it. With that, Jake, if you have nothing else to add, I think we can jump into a few of the member ideas.
Yeah, let's jump in.
All right. So the first one, again, for Anish, again, we kind of talked about it. He was asked about the SPY 233, and we kind of went over it. At least for me, I'm looking for a flush down through 30 and a buy back up through it. Shake, if you have anything to add, we can. And if not, we can.
Yeah, I mean, that sounds pretty spot on. We're very different. So it's like I don't have the macro levels I'm really looking for. Yes, I'd like to see 230 flush to buy and stuff like that. But I'm very intraday right now. So, I mean, there's just tons of action to the long side and the short side every day. So I'm not as much worried about the macro levels. I'm kind of in the weeds every day. The market's down 11% today, and the whole Alpha Chat made money long. So it's like there's just so much opportunity if you're trading intraday right now. So I'm going to let you take down more of the big picture stuff. Yeah. That's not my wheelhouse as much.
I think there was actually one other thing that you had mentioned that I think was very good in the shakedown, where you mentioned, a lot of the newer traders, they want to be buying on the big up days, the 10% up days. And then again, when we're down 10%, that's when everyone wants to be getting out. And I even saw this on Friday when the market was up 10%, and I was buying, the UTX and AXP and a lot of those names that had ripped into the close. Again, now they're all lower. A lot of the people that weren't as hesitant or willing to buy up through, UTX through 96, they wanted to buy it at 108, and then now today we're back at that price, and that's what you don't want to do. And you mentioned that, very good, where you almost have to want to be looking to buy things like when it's a little bit scarier,
Yes.
then versus crazy 10% updates because you've already missed that move.
Right.
Those updates are like the opportunities to kind of get out of stock, not
Exactly.
try to get back in. And it's hard for us to kind of say that to a broad group, even to our guys, because we unfortunately open up like Pandora's box where if a name's down, like I'm looking at NTR rates on 28%, we don't want to give that trader the thought of, okay, this is going to be a great buy because it's down 28% today. It's
Right.
going to be up 20% tomorrow.
Catch 22.
So that's where we sometimes kind of hold back for certain things because we don't want them to take it the wrong way. But I think you said it very well in the newsletter yesterday that, I think was great. So with that, we can jump into Joseph Park. He had a couple questions on support buybacks.
Okay.
And just broadly, he was saying a lot of the support buybacks that he tried, he just got in too early.